The real estate market in 2026 is a far cry from what most people expect. With soaring interest rates, shifting demographics, and new technological innovations, the investment landscape has dramatically changed. If you think you know where the opportunities are, think again. This is not about the traditional hotspots. It's about thinking outside the box and positioning yourself in the right place before others catch on. The real estate landscape in 2026. Real estate has always been a cornerstone of wealth building. But the traditional wisdom, invest in the big cities, buy near the coastlines, or focus on areas with rapid growth, just isn't cutting it anymore. In fact, those areas are becoming saturated, expensive, and less profitable. Real estate trends have drastically shifted, and 2026 is the year to take advantage of a market that's evolving at lightning speed. We're no longer looking at a market driven by simple demand and supply. The dynamics in 2026 are shaped by factors like technology, changing work patterns, government policies, and economic shifts that affect how people live and where they choose to invest. If you want to make money in this market, you need to understand these key shifts. The end of the urban boom. For the last couple of decades, everyone's been clamoring to get into the big cities: New York, Los Angeles, London, Paris, you name it. However, in 2026, the appeal of urban living is fading. It's not that people are fleeing the cities in droves, but rather that they're making more thoughtful choices based on lifestyle and work. The pandemic changed everything. Remote work is now the norm, and the urban density that once felt desirable no longer has the same magnetic pull. In fact, recent surveys show that nearly 65% of professionals would prefer to live in suburban or even rural areas if they could maintain their career momentum. This trend is only set to grow in the coming years. What does this mean for investors? Simply put, the traditional urban investment model is becoming outdated. Properties in major metropolitan areas may still be valuable, but their growth potential is no longer as high as it once was. Instead, it's time to look at suburban and even rural areas, particularly those that are within a 1-hour drive from major cities. The rise of suburban and rural markets. So where should you be looking to invest in 2026? Suburban and rural markets are on the rise. These regions are becoming increasingly attractive due to factors like lower living costs, improved infrastructure, and the shift in work dynamics. But there's a twist. These markets are not just any suburban or rural areas. You have to identify the pockets of opportunity. Take places that have strong commuter access but aren't necessarily part of the larger metropolitan areas. These semi-urban locations are ideal for those seeking more space, lower taxes, and a quieter environment, without sacrificing career opportunities. Cities like Austin, Texas, or Boise, Idaho have seen incredible growth in the past few years, and similar markets are emerging in 2026. But it's not just about proximity to major cities. You need to look for areas that are seeing significant investment in infrastructure, tech hubs, and business development. Locations with access to high-speed internet, affordable land, and a rising number of remote workers will likely be winners in the next few years. Technology, the game changer. The role of technology in real estate is becoming more significant than ever. Artificial intelligence, big data, and machine learning are transforming how investors make decisions. Gone are the days when you had to rely on gut feeling or outdated market reports. Technology is here to provide you with the insights needed to make smarter investments. For instance, using big data can give you real-time information about demographic shifts, local economies, and even sentiment analysis regarding certain areas. The rise of PropTech, technology-driven innovations in real estate, means that it's easier than ever to evaluate the true potential of a market. Think about automated property management, virtual tours, and smart home technologies that appeal to a growing number of buyers and renters. And don't forget about the metaverse. While it may sound futuristic, virtual properties and the idea of digital real estate are becoming more of a reality. Real estate? Investors in 2026 need to understand how virtual spaces will increasingly be tied to physical spaces and how the two can complement each other. The impact of sustainability on investment. Another major shift in 2026 is the growing demand for sustainability in real estate. Climate change, environmental concerns, and government regulations are all driving the need for greener, more energy-efficient buildings. Green buildings, solar-powered homes, and eco-friendly designs are no longer a niche. They're quickly becoming a necessity. In fact, cities and municipalities are incentivizing sustainable development through tax breaks and grants, while also imposing stricter regulations on carbon footprints. Investors who align with these trends early on can capitalize on future opportunities. Sustainability isn't just about being environmentally conscious. It's also about future-proofing your investments. Properties that are designed with energy efficiency, low environmental impact, and sustainability in mind will have long-term value, especially as future generations demand more responsible living spaces. Market trends, demographics, and aging populations. In 2026, demographics will play a critical role in where you should invest. The baby boomer generation is aging, and many are looking to downsize, relocate, or move into retirement communities. This trend is creating demand for different types of housing, such as senior living complexes, assisted living facilities, and single-story homes in more tranquil environments. At the same time, Millennials and Gen Z are stepping into the housing market, but with different expectations. Younger generations are prioritizing flexibility, community, and eco-conscious living spaces. As an investor, this means focusing on mixed-use properties that combine residential, commercial, and recreational spaces. Don't overlook multi-generational homes either. As housing prices continue to rise, more families are looking for properties that can accommodate multiple generations under one roof. These homes are designed to offer privacy while fostering family cohesion, and they're becoming a sought-after commodity. The changing face of commercial real estate. Commercial real estate, too, is undergoing a shift. The demand for office space has dropped, but that doesn't mean the commercial market is dead. Instead, it's evolving. Retail spaces are also changing. Brick-and-mortar stores are giving way to online and hybrid business models. What's growing is the demand for last-mile distribution centers, data centers, and flexible office spaces. In 2026, investors will want to keep an eye on commercial properties that cater to logistics, technology, and hybrid workspaces. Adaptive reuse of older commercial properties is another trend that's on the rise, especially in cities that are reinventing their infrastructure. If you're serious about capitalizing on the real estate market in 2026, make sure to subscribe to this channel for more in-depth insights and expert advice. Like this video, share it with your network, and leave your thoughts in the comments below. Don't let these trends pass you by. Take action now and start building your real estate portfolio for the future.